Bitcoin is entering a new era where institutional giants are no longer just investing in crypto. They are building the financial infrastructure around it. From Bitcoin ETFs to tokenized assets, Wall Street is moving deeper into blockchain technology. The biggest question now is whether this institutional shift will unlock crypto's future or reshape it forever. Bitcoin's biggest holders are not selling, they are accumulating. But the real question is, why are financial giants like BlackRock doubling down when retail investors are losing confidence? Something unusual is happening in the Bitcoin market, and the numbers reveal a much bigger story. Guy highlights that while many retail investors are stepping back, institutional players are doing the opposite. Major institutions are still holding around 1.25 million Bitcoin, sitting close to their highest ever levels, showing that large investors are not abandoning their crypto positions. But the biggest player making waves is BlackRock. Guy reveals that the world's largest asset manager has transformed the Bitcoin ETF landscape through its iShares Bitcoin Trust, IBIT. With more than 765,000 BTC and billions in assets under management, IBIT has become the dominant force in the spot Bitcoin ETF market. The surprising part? This institutional expansion is happening even as retail investors pull money from crypto products. While short-term sentiment weakens, BlackRock continues building for the future, expanding beyond Bitcoin into ethereum staking products and Bitcoin income strategies. Guy's analysis points to a major shift in crypto investing. The market is no longer driven only by retail speculation. Traditional financial giants are creating regulated pathways that could reshape how investors access digital assets. The question now is whether this institutional takeover marks the beginning of a new era for Bitcoin and the broader crypto economy. While the world thinks Bitcoin is losing momentum, the biggest financial giants are quietly making their biggest moves yet, and what they're building could change the future of crypto forever. What do you think about this institutional takeover of Bitcoin? Share your thoughts in the comments, share this video with others, and subscribe for more deep crypto market analysis.
To be wrong. Institutional Bitcoin holders are still sitting on roughly 1.25 million BTC, within 8% of their all-time high. They are not selling, and BlackRock, the biggest of them all, managing some $14 trillion in total assets, hasn't slowed down. Which brings us straight to the foundation of the whole operation, the ETF empire. BlackRock's iShares Bitcoin Trust, ticker IBIT, is the largest spot Bitcoin ETF in the world, and as of late June, it holds around $47.4 billion in net assets and over 765,000 BTC. That's roughly 61% of the entire Bitcoin ETF sector wrapped up in one single product. Indeed, IBIT accounts for nearly 74% of all spot Bitcoin ETF daily trading volume. Analysts call this a winner-take-most dynamic, and BlackRock is that winner. And this is despite the fact that retail is leaving in droves, with the ETFs recently posting their longest ever outflow streak, 13 consecutive days from the 15th of May to the 3rd of June, with IBIT alone bleeding roughly $3.3 billion. For the first time since these products launched in January 2024, the yearly flows have flipped negative. But while you might assume that BlackRock are asking themselves why they ever touched crypto in the first, in March 2026, BlackRock launched a staked Ethereum ETF, ticker ETHB, that stakes the ETH it holds for you and takes a pretty eye-watering 18% cut of the rewards. But they don't have it all their own way, as Morgan Stanley has since filed a competing product proposing to keep just 5%, which analysts say could eventually force BlackRock's hand. Nevertheless, as things stand, the most powerful asset manager on Earth is taking nearly a fifth of the yield your assets generate, with ETHB making its first cash distribution on the 9th of June, a modest $351,669, proof the machine is now running inside a regulated wrapper. And then, in June, they went further. They launched BitA, the iShares Bitcoin Premium Income ETF. This one is a covered call product, and for those unfamiliar, that just means it sells other people's right to buy Bitcoin at a fixed price and pockets the premium. It writes call options on 25 to 35% of its IBIT holdings every month, targets a 15 to 25% annual yield, and charges a 0.65% fee on top.
Everyone thinks money is leaving Bitcoin. But what if the biggest shift in crypto history is happening silently behind the scenes? What if the money leaving Bitcoin ETFs isn't actually leaving crypto at all? What if it's simply moving into a bigger game being built behind the scenes? Guy reveals that BlackRock believes some IBIT outflows could represent investors shifting into its Bitcoin Premium Income ETF BITA. In other words, capital may not be disappearing. It could be moving into a product designed to generate more income and create a deeper connection with BlackRock's crypto ecosystem. But this strategy goes far beyond Bitcoin. Guy highlights that BlackRock is quietly expanding into tokenized real-world assets, bringing traditional investments like treasury bills, cash funds, and securities onto blockchain networks. Its tokenized treasury fund has become a major player in this growing market, operating across multiple blockchains. So, is this the moment when Wall Street starts rebuilding the global financial system on blockchain? Guy points to Larry Fink's vision that stocks, bonds, and funds could eventually become tokenized, potentially moving trillions of dollars onto digital rails. The biggest takeaway is that crypto is no longer just about Bitcoin prices. The real battle may be about who controls the future infrastructure of finance, and BlackRock is making a powerful move to be at the center.
Jay Jacobs, BlackRock's US head of equity ETFs, openly admitted that when you see IBIT outflows, it could just be someone selling IBIT and buying BIT-A. In other words, when you think capital is leaving, it might just be getting upgraded into a more fee-hungry product without ever leaving BlackRock's machine. But the ETFs and the yield products are still just the surface. BIDL, BlackRock's tokenized treasury fund, launched in 2024, holds cash, US Treasury bills, and repurchase agreements, and keeps a stable dollar value. It's now one of the largest tokenized real-world asset funds on the planet, in a close race with rivals like Circle's USYC, sitting somewhere between $2.5 and $2.85 billion. And it's not stuck on one chain either. It's live across 9 blockchains, including Ethereum, Solana, Polygon, Avalanche, Arbitrum, and Base. BlackRock is positioning itself to be everywhere in crypto simultaneously. And Larry Fink has been explicit about this. In his own words, every stock, every bond, every fund, eventually tokenized. He's compared this moment to the internet in 1996, and he's now moving to tokenize BlackRock's $4 trillion iShares franchise. For scale, the total tokenized real-world asset market right now sits at around $32 billion. And now, BlackRock alone is preparing to bring $4 trillion on-chain. But it's not alone. There's a DTCC pilot running with over 50 firms, including JP Morgan and Goldman Sachs, to put Russell 1000 equities, major ETFs, and US Treasuries onto blockchain rails. The SEC issued a no-action letter back in December 2025, authorizing a 3-year pilot with limited production trades targeted for July 2026 and a full commercial launch planned for October 2026. And remember, the DTCC custodies over $114 trillion in securities. Even 1% of that moving on-chain is $1.14 trillion in tokenized assets. There's no getting away from it. Crypto's rails are being rebuilt by Wall Street for Wall Street. With the 10-year Treasury yielding around 4.5%, tokenized treasuries let stablecoin holders earn near risk-free yield on-chain that simply didn't exist before. And you can't exactly argue with the numbers either. BlackRock's digital asset products generated $42 million in revenue in a single quarter, and BIDL has paid out over $100 million in dividends since inception. BlackRock's own COO, Rob Goldstein, frames tokenization as a complementary technology, a bridge between the old system and the new, not.
The biggest battle in crypto may not be about Bitcoin's price anymore. It may be about who controls the financial system being built around it. As blockchain technology moves deeper into traditional markets, a massive question emerges. Are we watching the beginning of a new financial era or the takeover of crypto by Wall Street? Trillions of dollars could eventually move on to blockchain networks, transforming how assets like stocks, bonds, and funds are created and traded. But who will benefit most from this transformation? Will crypto become more accessible to everyday investors? Or will major institutions control the next generation of digital finance? One thing is becoming clear. Blockchain is no longer just an experiment. The infrastructure for the future of money is being built right now, and the companies shaping it today could define the financial landscape of tomorrow. Crypto's next chapter is being written right now. But the biggest question remains, will blockchain create a more open financial system, or will Wall Street control the future of digital money? Share your thoughts in the comments. Share this analysis with others, and subscribe for more deep crypto market insights.